Another stock on our radar is Anand Rathi Wealth. The company reported its numbers. The revenues met street expectations. The EBITDA obviously was impacted by a one-off ESOP expense. Adjusted for that, they were good. And AUM fell short of the 1 lakh crore target that Feroz Aziz had given to us when he joined earlier. The joint CEO of Anand Rathi Wealth joins us once again. Thanks a lot, Feroz, for joining in. We obviously discussed on the fourth quarter earnings, the outlook that you have for FY27 and further growth opportunities that you've laid out. Let's start with two things. One, on the AUM, which has obviously, understandably, missed your guidance, and that's largely because of the weakness that we saw in the market. On that itself, I just wanted to understand how much of that was on account of market weakness and how much of that was other factors that played out. And also on growth going forward, could you give us a sense on, the kind of operating margin stability that you foresee given the one-off that was there in the fourth quarter?
Mangalam, good morning. Good morning. When you look at the numbers, the right number which you first started with, which is the AUM number, which we missed, and we are so sad about it. 1 lakh crore is what we thought we would reach, and that's the only number we've not been able to meet. We have come to some 93,000 crores. Now, how much is accounted for because of the market having been very bad? A reasonable portion or a large portion of that is because Nifty between the 2 quarters, if you measure it as a picture from the 31st December to 31st March, is down about 14%. In fact, unfortunately, 30th March recorded the worst levels, 22,313 on Nifty. Having said which, what's our projection for this year? We're looking at 1,20,000 crores of assets under management. Assets under management in Anand Rathi's nomenclature is very, very different. We very microscopically add, because there's no industry standard, because AUMs are never a bank account credit. See, their expenses and revenues are second decimal merit across all companies, 5,000 listed companies. Assets under management can be loosely governed. So we only count those assets which we intend to monetize, where we are actually giving advice. I can count some promoter equity lying in my demat account and call it as AUM to show a lower yield. That's blue-blooded true AUM, which we want to get to 1,20,000 crores.
All right. Hi, Feroz. Good morning and good to see you. Well, the past quarter had that one-off because of ESOP cost. Could you tell us, will there be more such cost of ESOPs in the coming year? And next of that, what could your margins look like?
Yes, Nigel, there are two sides to it, ESOP and some assets which you own, which can get marked to market. We have been always taught to be conservative in our approach. So that's why there could be ESOP costs. There could also be some mark-to-market gains. That's why you see we have very transparently given you 2 profit numbers. We've got a profit growth from last year, same quarter to this year, including this adjustment of 40%. So this whole impact which you're talking about has been a positive impact, is why we've split it. Without any of those mark-to-market gain and ESOP cost, we've still grown about 25 to 26% on the PAT and maintaining our long-term guidance. Leaving these adjustments, also we've grown 25, 26, and this is my 18th quarter result. And I've been fortunate to at least be interviewed by you and TV18 for 16 of those. And we've promised 20 to 25 as a growth number for years to come. God has been kind and clients have been kinder, is why we've been all quarters, we've beaten this guidance of 20-25% range on the PAT number. All
right. A large part of the business model also, is structured products. The AUM out there grew by about 23%. We're looking at a number closer to 26,500 crores. The 5-year rollover model that you have, what proportion of your SP book now is in rollover versus fresh issuances, and how does that impact the upfront and trail economics? Because I remember you saying that, you target 50-50 in trail and upfront. Where does that number stand?
That's why I called myself fortunate to be interviewed by TV18 for 16 times, because you remember what's being told. And a professional, the least he or she should be is accountable to what he or she says to the common shareholder looking at your channel. So yes, so one thing which I had said was we should try and move to 50-50. Is that aspiration there? Yes, we are moving in that direction. And I think in the next 3 years, we should be able to get there. It's a very sticky number. But yeah, we should be able to get there. And I still stick my neck out to say that.
Where's that number now?
Of the 1,300 people working. Second, what portion of our asset structure products are in a rollover. As far as now, it's 99.9%. There could be some exceptions who are not doing rollover. That automatically implies I'm planning my 2031 sitting in 2026.
Okay, all right. I wanted you to quantify that ESOP hit that we could see in FY27. We've got it for the past quarter, but in FY27, what could the potential hit be? So we are prepared for that number.
So, Nigel, I have not got into that second decimal math, and that's not how, as professionals, you can expect from us. Of course, there may be more accounting professionals as administrators. What you can expect is the guidance which I've given you, 460 crores of PAT. Will that be met if God is kind and if Mr. Trump is kind? We should be able to meet that 460 crores of guidance we have given. We've given a guidance of 1,415 crores of revenue and an AUM guidance of 1,20,000 crores. So I will not break that down in terms of debit and credit, but these numbers are very well thought out and they go with our DNA of under commit, over deliver. Like last year, we had said 375, ended at 386, even in a bad year. There is some degree of provision we always keep for unforeseen circumstances, like the Iran war was not foreseen about 6 months back, but we still could provision those shock absorbers to the commitment which we give. So hand on heart, I will tell you what we can see. That's 460 crores of PAT, which is the resultant outcome of all the credits and debits.
We'll hold you to the numbers at least that you're giving us. Final question from my end. You're a people's man, right? And the way you stitch the team together has been phenomenal over the years. However, in the last year, I've seen the number of employees, who have left have gone up a little bit, I think to around 7. Could you give us some clarity with regard to how much money were they, in charge of, and how much of that will be retained?
Nigel, brilliant question. It is a people's business. There's no plant, there's no machinery, there's no real estate. Unlike there are so many optionalities in several businesses, this is a people's business. It's a conglomeration of 1,300 passionate people who feel for a certain cause. So when you lose 7 people, those are aberrations and those have to be microscopically seen. And I'm glad that you're putting your attention there. In the last quarter, you would again see we had 0 regret attrition. Let me again clarify, what do we call as regret attrition? Anybody who reaches even 40,000 crores of assets under management, our boss, Mr. Rakesh Rawal, says he qualifies to be a private banker for life. It's a very small passing mark. Incidentally, it's the 10th passing mark as well, 40 crores. Anybody above that, if they leave, we call them mechanically regret attrition. That was 0 for last quarter, but 7 for the year. Oh. Where did they go? Because people believe, have very extraordinary salaries. People think it's very easy to build a wealth management business, so they take some people away. How much did we retain? We retained almost about 82 to 83% of the assets on a net flow basis without mark to market.
All right. No, because I remember the third quarter call, you mentioned that retention was 88% and that's come down a little bit. So just wanted to understand if there was any slippage from there, if there's a final number to that. And also the other part, while there was regret attrition on the RM level, I looked at client attrition as well. As a percentage of your AUM, year on year, there's been a smidge of an increase. In the fourth quarter specifically, from 0.11, it's gone up to 0.23. So is this because in a down market, the clients are questioning allocation? How does that work?
Mangalam, unfortunately, most of my other competitors don't give these numbers. The fact that you're having to put a decimal and 2 digits subsequently itself will tell you how small it is. Of course, 0.23 could become 0.32. Generally, in wealth management, I have been a relationship manager and still I am one. All our leaders in this company are relationship managers first. When you look at it, will this change? Because it's so second decimal, it's like a vernier calipers measuring something. I would say that it's nothing to worry about. If the other industry participants measure it in the same barometer we have defined, I think you will see numbers above 10%.
Take that point, Feroz. Always a pleasure speaking with you. And, the quantum of information that you give out via your presentations, etc., lets us prepare more and ask you tougher questions. But we take your point on board. It's small, but significant. But we'll definitely monitor. And it's been a pleasure speaking to you for the 16 of the last 18 quarters. And we continue to do that for the next 32 and beyond as well.